Okay, we're good. We're recording now. The piece of software that we'll be looking at is I say, is online. Before I go there, though, we've had an exceptional turnout to these webinars today, and particularly the Monday morning one has been really, really quite encouraging. So, out of that, we've now decided, FP Markets has decided we're going to do 3 face-to-face workshops, which are coming up on the towards the end of November, on the 21st of November in Sydney, on the 28th of November in Melbourne, and on the 12th of December in Brisbane. So you'll surely get an email with information about that, but they're coming up. But tonight we're going to take a look at the US markets, scanning the US markets, and looking at the US markets as a potential trading ground in there. I'm going to, as I say, use a piece of online software to do some scanning for us. It has some basic charting functions in there as well. You can subscribe to their website, which gives you a little bit more, lets you in a little bit closer, gives you a bit more functionality in the website. They're not associated with FP Markets at all. We just came across them, as I say, from a client recommendation to have a look. But if there's something's interesting, I'm going to change back to the software that I use, the Phoenix AI charting software, if something requires a little bit more attention. And then as we finish, Joe Kelly is going to come online and show how IRESS, how to set it up in IRESS, that placing orders and setting stops with the IRESS platform and the IRESS order box, that type of thing. So that keeping in mind that the way some people trade is they choose to sit up all night. I know a number of people do that, and others just choose to set orders and with a stop loss behind them, and one cancels the other order if something happens, and wake up in the morning and see how it goes. So before we get going, a little bit of background about myself for those who aren't aware of who I am. I hold the diploma in technical analysis. I'm certified with IFTA, which is the International Federation of Technical Analysts. I've been on the desk for about 7 years, a few years ago now, with Macquarie and RBS, Wilson HTM. There's 17 years of private trading. I hold ADA 1 and 2 derivatives accreditation. I'm current president of the Sydney Technical Analysts Association, the Sydney chapter, and a member of the Professional Technical Analysts Association as well. So welcome to tonight's webinar, Trading Wall Street from Your Street, as I say, presented by myself and Joe Kelly. The material contained in this webinar is general advice only. It doesn't take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as of the date of the publication today, but we do recommend that you consult a licensed advisor before acting on any information you may see or hear. The US markets essentially started 1792. By 1906, the Dow Jones Industrial Average, which had about 6 stocks in it at the time, was 100 points, just crossed 100 points, and recently, as we know, it crossed 18,350 just a month or two ago. There are over 2,800 listed stocks on the NYSE. There's another 3,000 in the NASDAQ, and it just goes on. And you can see here on the little chart the monthly turnover in shares, group shares and group trades, and the billions of dollars that gets turned over in here. When we were looking at using the scanner in this presentation, we were looking at, I thought we'd filter out stocks that turned over less than $1 million, and it basically filtered out nothing. It really is quite a liquid market. That's why we're a little bit interested in it at the moment. So the site that we're going to look at is here. It's www.finviz.com. It's a free site, We'll get to there in a second. It's a free site. As I say, you can subscribe to them. Nothing to do with FP Markets whatsoever, but you can subscribe to them. You can go, and which gives you a bit more functionality to the tools that we're going to use. But the tools we're going to use tonight are basically free online. As I said a bit earlier, there are a number of very, very good sites available for charting US stocks, most of them live. There's one, freestockcharts.com, another one is stockcharts.com, and this one, FinViz. So when we go in and have a look, the FinViz, the front page of FinViz when you log in, this is essentially a screenshot of it, and we're going to take a look up here. You come into the home page, of course, but there is a little tab there called the screener, and when you click on the screener, it comes up with essentially three different areas we're going to look at. And one of them, if you have a look over here just on the right hand side at the top, there's descriptive, fundamental and technical, and each one of those tabs has a series of parameters that you can set to scan for stocks. I really wish we had something like that as simple as this in Australia. But in this screener, we're going to look at the exchange area. We're going to select tonight. We're going to select the Nasdaq and the Nasdaq stocks that are traded in New York. So the index will be the NYSE, the S&P 500, and then we're going to come across to the technical section and start to look at 50-day highs and also the 20-day high, and do a little bit of simple analysis on them, take a look at some simple analysis, and potentially set up trade parameters around that. So the concept is that we go to the screener, we go to the index, and then we start to set technical parameters. Now, the reason for this, the scanner has a 50-day high-low. As most people know, in the daily newsletter that I put out, we have a 60-day high-low. In there, 50, 60 days is really neither here nor there. For the moment, what we're looking for is a high probability outcome from a trade selection, and we find that when stocks consolidate for 1 to 2 months, up to 3 months, these consolidation periods lead to highly probable breakouts one way or the other. Now, as most people who've met me before or worked with me before know, that I'm essentially a Dow theorist. I have very strong views on a thing called Dow theory and trend analysis, and we'll have a look at a little bit of that tonight. So the 50 days is an issue because the 50 days, as I say, gives a higher probability outcome to a trade direction, and it's what we've found over the years, or what I've noticed over the years, is the traders without a plan, they're the ones actually taking the large losses, and so I'd really encourage you to get some sort of trading plan together, because often market traders try and pick the high, or pick the high to go short, or pick the low to go long in falling prices, to find out that things get a lot cheaper or get a lot more expensive along the way. So if you're trying to do that, pick highs and pick lows, it really does lead to a random outcome, and unless you've got a good grip on your stop loss methodology, then you really have a low probability outcome from any sort of trading. You really have a random outcome from any sort of trading going on. So when a stock finds a low, it often sets a base before changing trends, and we've seen that a lot in the Australian market recently, particularly in the gold stocks, where stocks have come down late last year and really took months and months and months to form a base, and suddenly they're starting to change trend. And this is what the scanners will pick up. They'll pick up these breakouts above these, even if the base is quite long, several months. These scanners will pick up the breakout or when something pokes its head up above these 50-day or 20-day periods. So there's a question there, can this scan the ASX? The answer is no, which is a pity, because other software you can buy will scan the ASX. The software I use, the Phoenix AI, scans the ASX. but this one is for US based stocks. So when a stock enters a consolidation, really only three things can happen out of that. A trend change occurs, or it just simply continues to consolidate. And as we know, consolidation periods can last a very long time. And it's really the analysis, really some really simple basic analysis to do. I'll show you some ideas as we get a bit further along. So a 50-day high or a 50-day low breakout looks like this. It's where a stock has essentially come down, trended down, gone into a consolidation period, and then either broken out, continued with its downtrend, or broken into an uptrend, or a stock has rallied up here on the left and gone into a consolidation and then broken higher again, or simply broken down out of that. A really good example of what's going on with this at the moment. You can have a look in when we finish this is CSL at the moment. CSL, I believe, is setting a very, what they call a broad top. In there, it's had a false break and looks to be setting a broad top. So it's really consolidating sideways for quite some time. So the 50-day high-low, the breakout in price lets the market show us the direction. It puts a probability on our side as the trader. It gives us some high probability direction of the future direction of the price. But it still requires a trading plan, still requires a little bit of methodology into the selection. So we're going to take a look at that. So the method requires some basic analysis, and let's have a really quick look at what that may look like. So high probability trades occur in the direction of the primary trend. So once we get this consolidation period and a breakout, if the breakout is in the continuation of the established trend, it ends up as a really high probability outcome rather than just a random move in the stock, because often stocks consolidate as they wait for news, as they wait for reports, wait for market sentiment to move, and then break again in that direction. There's some really great Australian stocks, as you've probably seen, the Bellamy's and the Capilano Honeys. Those types of stocks are really doing exceptionally well. Refined is another one of those, RFN. So the concept of analysis, when we look at the concept of analysis, we have this, this is my little graphical picture of a primary bull market and a primary bear market. As most people have seen and heard, this is that initially the bull market starts as buying against the wall of worry. It's buying against the bear market downturn, and then we have this pullback, the first pullback, and then we end up with technical buying, and then ultimately the speculation top happens out there, and then there's the loss of hope out through there, and we find that the market then sets a lower high, breaks the previous low, when we've got this technical selling and distress selling. This is the model of what they call a primary bull market and a primary bear market. All of the phases of emotion, if you like, through over a number of years. But this also happens in short time frames as well. This example, this slide here, if anybody's ever done a workshop with me, this is what we get to see every time I go and talk somewhere, is this little model here where stocks will make a final low and they'll rally up, which looks like just a continuation of the downtrend, and start to fall away. But suddenly there's the higher low comes in. The buyers come in a little bit earlier than the final low and push the price above the previous high. Now this is where trend is established. Trend has nothing to do with moving averages or indicators or anything like that. Trend is based on price, pure and simple price, and the professional traders really focus on price alone rather than looking at indicators to give a buy or sell signal. Indicators can give a little bit of comfort, but when you start to look through, as they say, when you start to look through a number of indicators until you find one that fits what you really want to see, there's a problem. So we're looking at price. We're looking at the price moving up, making a high, price pulling back, making a higher low in here, and then eventually breaking through here. And this is the bit that gets my attention, is when prices break to a new high And so we're going to look at some charts in a moment about what that actually looks like in the US stocks that we'll be scanning. So in a chart, in a pure and simple price chart like this one here, we can see here that down on the left is the stock's moved up. It's gone into this secondary little consolidation period here, and eventually breaks through past the previous high. At that exact point, there's your trend. Your stock is now trending at that point. Now, this little model here can apply in all time frames, and you can do some work on this and establish, where trends are going in different time frames. And when you get essentially two time frames, a weekly time frame, a daily time frame, matching each other, you really have high probability outcome. And confirmation is the market's moved up, goes into a little secondary market again, and the market moves up again. And it works in the opposite direction as well. As the market comes down, the market falls, tries to rally, forms the lower high, breaks the previous low, and sets the downtrend. As it breaks through this low here, there's your exact downtrend. Market rallies and breaks the low again. And this is where, unfortunately, a lot of new traders think that this type of action in here is the beginning of something new. They're trying to find the bottom, and often the stock just breaks down and continues with its trend. So this is what it looks like graphically: the high, the low, the lower high, and as it breaks that low, it sets itself off into a trend. All right, so we'll leave it there for the minute, and we'll have a look. We'll have a look at this software, hopefully. Okay, so this is the FinViz site. This is www.finviz.com, and this is what you essentially see on your first screen. So what I'll do is I'll go back to the home page here. There we go, that's the home page. This is really fabulous site here. They have so much information on this site, and also a very technical site. They're grouping stocks into patterns. They have some intuitive charting software on there, which, I not entirely agree with where they're drawing some of their lines, but they have some intuitive charting on there. But they also group into patterns. They're grouping stocks into particular patterns that you can take a look at, and also the gainers and the losers, that type of thing. And have this really nifty heat map here. Those that were watching the morning newsletter would have seen this in about a week and a half ago, and there's one thing you really have to notice about this. This is last night's market from the US. There's one thing you really have to notice about this is the top right-hand corner. There's the basic materials sector. This has been green for 2 weeks. There is something going on in the resource area at the moment where platinum, palladium, gold, as everyone knows, all coming off their lows in a fairly, at the moment, in a fairly significant way. So it's quite an interesting site altogether. So go back to the home page, and you have this basic overnight summary on there. The prices on this site are delayed by 15 to 20 minutes. And I think if you subscribe to it or something, you might get live data, but there are plenty of other free live data sites available as well. So we're going to go to the scanner. You see along the top here, there's new home, news screener, I should say. And we'll open up the screener. And as we mentioned, essentially at the moment, it's got every single stock listed there. There's 360 pages of them times 20, all listed there. So we want to start to thin these out a bit, and we're going to look here at the NASDAQ. Simply click the, we might take the NYSE. NYSE as the exchange. So that's our first pick. The next one is we're going to select the S&P 500. So we've now limited our scan to the S&P 500 on there, and also you can select volumes and some fundamental things like market cap. There's market caps in here, 10 billion to 200 billion. There's a number of stocks that meet that, but market cap can be over 300 million, will provide enough liquidity, and the average volume, for example, we could say, well, look, we want it to trade over 1 million shares in there. Now, just by selecting those 4 items, we're still down to well over 17 pages of stocks. So the other filter I find useful, and also find useful in the Australian market, is this price filter. So in the US market, we're going to scan for anything over $10, and there's a number of selections here from under $1, over $100 and so on, but we're going to take a look at things over $10 in there, because it comes into a different investor category, if you like, a different investor mindset rather than the penny stocks. So we've got now NYSE, S&P 500, market cap has got to be over 300 million. The average traded volume for the session is over 1 million. And the stock's got to be over $10. So that's our little descriptive tab. There's a fundamental tab here that we don't need to do anything with, but we'll take a look. And you can scan, if you're a fundamental trader, you can set up your scans in there based on debt to equity and PE ratios and earnings per share, that type of thing. But we really want just this technical one, like to keep things nice and simple. And in the technical section here, there is a 20-day high-low and a 50-day high-low right here. So we're just going to focus on these. Now currently, you can see down the bottom here, we've got well over 17 pages of stocks. If we took the 50-day high-low and we select the first one at the top here that says new high, and we're now down to 1 page of 15 stocks. So we've now basically discarded 7,000 stocks, and we're down to 15 that meet that criteria. Over $10, trades over 1 million shares in a session, but more importantly have met this criteria of a 50-day high. Now when you hover your mouse over the little stock code here, work for me. Okay, when you hover your mouse over the stock code here, it should bring up a little chart. Now maybe my computer's a bit slow. Okay, so it's worked all day except it's decided not to work now. Never mind. So anyway, so we can simply click on this code. It will take us to a chart. It'll take us to a chart here. As I said, the charting on here at the moment is fairly basic. If you subscribe to the site, you may get a bit more to work with other than what's here at the moment. But at the moment, all I want is a basic chart. And this one, AEE, essentially we're looking over here on the right hand side, and it's given us a 50-day high. This stock's moved up, we can see, and broken out through here, but on last night it made a new high, but it was actually a down close on there. So the software is, as I say, is intuitive. It draws its own lines on here. There's potential that there's a bottom line here, top line here. This may be in a bit of a channel, but always when we go and analyze a chart, when you go and analyze a chart, take a look at the weekly. Question here, just before I go here, there's a couple of good questions here. One is, how long is a major trend at 50 days is used to indicate the breakout? Doesn't matter. What we do want is a trend in place. Now, as an example with this stock, we can see that the trend essentially has been up. It's had a move up through here on the right-hand side, sorry, left-hand side, gone into a consolidation and then broken out. This is quite nifty. This is the sort of consolidation that we're looking for, and then the breakout, and the stock's moved higher. Since then, it's had this looks to be a little bit of a top in place, and a consolidation gone into a down move here, and looks to be a little bit all over the shop here at the moment. So it's probably not something that would interest me straight away, so we're basically done with it. So the other question is there a similar application like FinViz that can screen the ASX? The answer is no. I use Phoenix AI software, which has its own scanner in there. You can't scan the SPY in there. So we'll go back to the screener. So up here on the left-hand side, here's a little thing called back to the screener, and we'll go and look for our next one, Delta Airlines. That's what I'm looking for. So you can see when I hover the mouse over there, now it's decided to give it to me. We've got this little chart here. It gives you a quick look, quick view of the stock itself. So while we're here, we'll have a look at Delta. We can see this is getting a little more interesting. So we're here, I'll just go to the weekly first. So we can see that the stock has been in a broad uptrend, had a bit of a pullback here last year, rallied again, consolidation. Now every chart's got this spike low, which happened on August the 25th. Most Australian stocks have it as well. But this is getting interesting now. We've got, this is a weekly chart we're looking at, and this is starting to break to the high side up through here. But if you look immediately before that, you'll see that there's the higher low in here, which is really what we're looking for. We're looking for this move up, this little consolidation period here, which took 3 weeks in this case, and now the break. And the candle before the breakout was a high close candle, and currently the week's not over yet, but there's a reasonably, it's been a little higher this week, but it's just starting to break out now. And we can look in the background, for those that follow the Haguro methodology, which I incessantly talk about on Mondays, is it's starting to challenge the midpoint of this rejection candle here right at the top. So this is getting a little interesting now, and will require a little bit more work. So I'll go back to the daily, just on this chart here, so we can see the daily has this August 25th low in here. It's rallied up and formed this higher low here as well, which is essentially higher than these lows in the background, and is now, this is the one that showed up on the weekly chart and is now starting to break. Often when you see me put up the charts on the FP site, and there's a breakout in the morning newsletter, on the news feed, on all of the charts I've put up, if there's a breakout like this, there's always a note that accompanies it, says that don't be surprised if you see these stocks retest the breakout level, in this case $48, which it did last night. Now, a methodology with this is start to look at setting orders out at a limit order out here. If this starts to move out through here, it will pick you up on the way through as a limit buy, and then you have the momentum, of course, on your side. So we'll keep that in mind. DAL, Joe might have a look at that when he comes in a moment. So I'll go back to the screener. ECL. This is what, this one's already had the run, looks to be a breakout, but this is essentially what I'm looking for, is this consolidation pattern in the background here, and then the break here, and as I say, it leads to high probability outcomes. So we'll go to the weekly chart, see what that looks like in a bigger picture. You do need to subscribe to this site to get a bit more chart functionality, but all I'm looking for is this breakout here. So nice strong candle on the weekly breakout out of this consolidation in here. Potentially it's really untidy, but potentially you might have a left shoulder ahead and a shoulder in here, that type of thing. But it's there's a number of stocks in the US that are really, there's so much to pick from when you start to drill down and scan in this type of breakout tool. So we'll keep in mind also ECL, and we'll go back to the screener. There's a note here. Someone said that they recall that FinViz has a score out of 10 for stocks. Is it worth looking at, or does price action override this? Price action is the only single thing that's going to make you money. Doesn't matter what any analyst says, doesn't matter what I say, doesn't matter whatever. Price action is the only single thing that's going to make you money or take money off you. So it's just be aware of that. So we looked at ECL, Edison. We'll take a look here, and we can see again here the stock has trended down over the early part of this year. It's formed a low down here in July, had a run up, formed a higher low here and starting to break. Not a great looking chart just yet. Take a look at the weekly chart. I'd like to see this really trade above this high first to know that this is really underway. But it is the fact that it's got this higher low in here, if you take nothing else out of looking at this chart, just notice that there's a higher low in here and a very strong week in here where it's traded up and then broken out through here. But I would like to see it trade above this midpoint rejection candle here. I really would like to see it trade above $65 or close above $65 just to reject this candle in the background right there. So we'll go back to our screener. This one was interesting. Southwest Airlines. This is actually a great looking chart. I'll go to the weekly on this. As you can see, the software draws its own little patterns. But Southwest also had this move back in here, June, July, had a move up, set the high. This is the August low in here, but is also starting to break out. But it's got past this major rejection candle at the left here. So this is also starting to look a little interesting. This is something you really would set a limit buy order somewhere out a little ahead of the price at the moment, and hopefully get picked up on the way through. Keeping in mind that, of course, at the big rejection area, the big price area is up here around $45 as your rejection area. So we'll go back to the scanner. McDonald's. Now McDonald's, I'll show you why I'm not real keen on this. You can see here on the right hand side it has a huge engulfing candle there, basically a massive dark cloud on those 1, 2, 3 days in there. I can't make the charts any bigger. As I say, this is a free site. If we wanted to look a bit closer at this, we can get it up on some other software. But a massive outside period here. Generally, a large outside bar like this will basically be a sign of a turning point, a pivot point in there. And in the weekly chart's not finished yet, but we can see also it shows up here as the little gravestone, potential gravestone here. Week's not over yet. We've got tonight and tomorrow to go, but potential gravestone. So this would be a potential that it's going to come back and check this breakout level at $100 here, and would really have to end up on a post-it note on the side of your screen to watch this and see what occurs with the price action. If it comes back here and finds support at $100, this really might be also a great entry point into that stock. So we'll go through this little thing, Alteria Group. this has already had looks like it's already had the move. It's come up in the scan, but it's already had the move, but this is essentially what I'm looking for, is the break. We can see it's had a little retest of the breakout level and really started to move along. So this is the high probability setup that they're looking for, but a little bit earlier in the stage here. So we'll go back to our scanner. As I said a bit earlier, gold stocks are really doing their thing. This is something, if I was writing the newsletter this morning, this would make it onto the front page of the newsletter. Let's take a look at this. This is Newmont Mining. In here we can see it's been all over the place with the moving gold prices over the last couple of years. But this has had a fallen back down through here to 16 odd dollars. It has formed this consolidation in here and starting to break upwards through here. And we saw it in the background here as well, where it's had this strong run down, formed this consolidation here, and then broken upwards. It's basically a U-shaped pattern in there. They call it a wall, as it makes a strong wall on one side. It generally makes a strong wall on the other side, and occurred in here as well, a small one in here. So we've got a very similar pattern here. So we'll go back to the daily on this. With the gold price up $20 again last night, when you spread this out, this is where a trend has come down, the daily trend has come down. It's got three significant lows, 1, 2, and 3 in here, this ideal pattern with a break. We can see the original break here at just over $18. It's been back, it's tested it, now starting to move. This would make it onto the extreme high probability list and would have to be on a pink post-it note. We'll go back, just have a quick look at a couple more, then I'll ask Joe to come in and show you the order system, the IRESS order system, and I'll probably finish on this one. So this is PPL, again, major double bottom in the stock, big consolidation through here, and the higher low here on the right hand side, and starting to break out here as well. Now before I let Joe come in to set up, I'll just go back to the scanner here. We've looked at the 50-day high. If we just set that back to any and look at the 20-day, oh, the other point is for those that really find favor in going short, you can actually look for the low as well. And of course, everything is simply the other way around. And in this case, Dollar General, major downtrend, triple top, nice triple top up here, and then the breakaway gap down here to the lower high, the lower low, the lower high, the lower low, the lower high, and again it's broken, the daily chart's broken down through here. Just be aware there's a bit of support probably through here, but it's really is setting a downtrend into this stock. So we'll just see if we can get the weekly up, and we can see here major top. There's the gap. That's the bit you need to take notice of. The stock's rallied up and closed out the gap, consolidated and broken down again. So there's the first support level, and I would suggest if it breaks any lower than here, it may actually have a look down here at the $55 level as part of this trend. So I'll go back to the screener. I'll just have a look at one more thing. So that was a 50-day. So we'll just set that back to 0, and then we'll just have a very quick look at the 20-day. And I'll just go through some of these questions before I let Joe go. So the 20-day, in this case, we've simply kept the same criteria. I'll go back to the descriptive. We kept the NYSE, the S&P 500 over 300 mil, average trading volume over $1 million, and over $10. So I've kept all of those same things. I'll come back to technical, and I'm now selected the 20-day high on here. There's a number of other things you can also scan for. RSI values, you can search for where an RSI indicator is. Not a great fan of that. I think the analysis is more important than bring the indicator in on top of that, but you can scan for other types of certain candlesticks, that type of thing in there. So a 20-day high, I think we looked at AAE before, down through here, this type of thing, NUE, downtrend, high, low, lower, high, lower, low, probably not something that would get too interesting. It really needs to do a little bit more work than that. This one here, OI, whoever they are, Owens, Illinois, consumer goods, and has this inverse head and shoulders, shoulder, head, shoulder, breakout, consolidation, and looks like it wants to break again. When you bring these stocks up on these charts, you can go to any other charting package, MT4 or any other charting package, and do some more analysis on it, something you're more comfortable with. This is just to give you, filter out all the noise and give you some high probability things to look at. When you open up the chart down here, down the bottom, as you go down the page, it has the recent news, where the brokers are at with this. We can see that Merrill Lynch has just re-rated this today as a neutral to a buy. Back in May, they upgraded it and so on. So we can see that where the brokers are at with this, and below that is essentially the current news related to that stock. If you want to do a bit more research, which I would encourage you to do. But you really want the three things to match up here. We've got high or low in here on the day chart, a breakout, consolidation, and looks to be breaking again. And so it sets up higher probability outcomes rather than trying to pick lows or trying to pick highs. So I'll go back to the screener and I'll take on a couple of these questions. Yes, the session's been recorded. Let me go back. I use, hang on. So when you say consolidation, is there a way to measure it? Well, the measurement is at least 50 days. That's what we're looking for here, is 50 days. If you do a bit of homework on this, 50 days is quite a reliable consolidation period. Most technical analysis looks for a 3-month consolidation period. 50 to 60 days is within that range, 2 to 3 months in there. So like it needs to be less than 10% in range. No, it needs to be, well, yes and no. No, the short answer is no. It needs to be a consolidation and a breakout, because we saw back in here, we saw back in one of these, there was there's my senior moment again, can't remember which one it was, but there was an inverse head and shoulders pattern in there, which can be quite a large range as well. I use Profit Source to scan the ASX. Does it still work? Well, I guess so. The methodology, I'm not interested in the stocks themselves. I'm interested in the methodology, and it works across all markets. Should we be looking for tighter consolidations? No. You should be looking for the high or low on the right-hand side, and I've pointed out a number of those as we've gone, but you really want this a chance for the sellers to come in, a chance for the stock to be sold down, and if that fails and the buyers come back in and push it higher, you'd really just want to be on board with those buyers. Would you be looking at a moving average? No, not a great indicator person. Do you filter stocks that are stronger or weaker compared to the sector or index? No, I don't, but in this software you can. and in most other software you can. And it's all essentially what you're doing is looking for a contrarian view of a particular stock. But I believe that stocks trade essentially on their own, and a classic example at the moment is there are a number of gold stocks in Australia, because that's where I do most of my research, that have just gone gangbusters. The Northern Star and the St. Barbara and the Regis Resources, and there are a number of gold stocks that aren't performing well at all. And so it's you must do your analysis individually on each stock, because companies run for different reasons on their production costs, on their financial management, on their discoveries, whatever they're doing, all those things. So how do you distinguish false breakouts from real breakouts? Absolutely fabulous question. Fabulous question. How do you do that? Okay, let's have a look at. Well, that's probably not a good one. Monsanto's in a downtrend. Really fabulous. That is a really fabulous question. This is something that should bother every trader. How do you distinguish a false breakout from a real breakout? And I've got some really bad news for you, is you can't. You can do a little bit of volume study. I'm just going to bring up my other software. This is my Phoenix thing. Sorry, I'll just go back to, it was OI. OI. Hopefully it'll come up here. Yep, there we go. So this is the stock we just looked at. I'll get the weekly chart up as well. Okay, so weekly chart's really showing this in a bit of a downtrend now, so maybe it's not so interesting. But here's the thing. Here's the thing. If in the daily chart, if we drew a resistance line across here, and we can see this stock has essentially a shoulder, a bit of a head pattern in here, and a shoulder. So we have this inverse head and shoulders pattern in a daily chart. Now in the weekly chart it looks a bit congested down here, but there's something to notice about this. If we look at the bottom chart here, notice that on the way down it had these little consolidation periods and a significant breakdown. So this is in line with the trend. This is the primary move. So the primary move stands out as the longest part of the long ranges like this, long trading ranges. And then the secondary markets here with their short trading ranges, really just consolidation periods. And then we had this push down again here, which was immediately reversed. So something's starting to cook in this stock. And then it sort of basically bounced around and wandered along here and then eventually wandered off down here. But we're starting to see on the right-hand side, within the last 10 bars, there's 1, 2, 3 major pushes off the bottom here. So something's starting to cook in this, something's changing about the way this stock is trading. So that immediately gets onto the radar. So in the day chart here, we can see that there's a shoulder, it's turned into a shoulder, a head, a little bit untidy, and a shoulder here, and a breakout through here, and then this consolidation, and then we have an outside period. So the question was, how do we discover whether they're false breakouts or not? The fact is you simply don't know. And this is what separates out those that trade successfully and those that don't, is the management of their stop losses. And anybody that's followed the portfolio that I got up on the FP market sites available to everyone, you'll notice that one of the portfolio rules is that I have the stop. If we go back, I know hindsight's a wonderful thing, but if we go back here, if this was the breakout day that got interest and we decided we're going to enter the market here, the stop loss in my little trading plan, the stop loss goes here underneath the first bar. So I know what my entry price is and I know what my risk is on the stop loss. Now, two things are going to happen. Either this stock is going to continue with its movement up out of this pattern, or we're just simply going to get stopped out. And in the portfolio, I'm not here to talk about the portfolio per se, but in the portfolio, there's been something like 45 losses in there and 17 winners. So the win-loss ratio is appalling, but it's up over 30%. It's got to do with the stop. Everything is about the stop on these stocks. You can't work out whether something's a false break or not. You can do a volume study on there and say, well, you know, it's broken out on light volume, so that gives it, you know, maybe a score out of 10 of 2 or something, but it's really, who's to say? Price means everything, and we don't know what's going on behind the scenes in the stock, anything like that. So even if the trade was taken, for example, on here, and I'll get Joe in here in a moment to show you how to set that up. If the trade was taken here at $23.82 as a fresh break of this high from last night, and simply set the stop here, and you go back and do some homework on this, and you find out that there is a high probability that when you get on the side of the trend, there's a high probability that trends will continue. And occasionally you'll get stopped out, which is really irritating, but the stop will be small. And then when you get onto one of those trends, they will basically recover all of those small stops along the way. All right, now I'll take another question. There's a question here about orders. I'll let Joe take that on. Indicator. What are the indicators of reversal? The indicators of reversal are price. Simple as that. Nothing else. How do you determine the same? Are there any simple methods of knowing? Yeah, trend is. You must understand trend. If we take a look again at this chart here, out of this low here, we have this very strong push. We had the next candle with a higher low, higher high. Then we had a inside day with a basically, just a higher low and maybe a lower high by 1 cent. Then we had a higher low and a higher high and a higher low and a higher high and a higher low and a higher high. Then we had an inside day here and we had a outside day here and an outside day again. That's the conversation you have yourself when you're looking at these charts, and you'll find that as you watch price action, you'll start to see the trends within trends. So is the session being recorded? The answer was yes. I noticed that NEM had an unfilled gap off to the left just above the current price, giving another improved probability. Yes, that's absolutely true. You need to go back into a stock and look to see if it is a gap filler. Classic gap fill was Bellamy's this week. An Australian stock. Where does FinViz show the dividend date? Don't know. Good bit of homework for you. Do you place a lot of weight on broker recommendations? No. I worked as a broker. I don't place any weight on those recommendations at all. What about, except to say occasionally they do get it right, but it shows up in price. And if you focus on the price, then you don't have to look at anything else. What about doing the scan across just the top 2 or 3 strong sectors? Yes, you can do that. The site's free. As I say, FinViz is free. I'd encourage you to do that if that's part of your trading plan. Would you start running at a 50-year high like AE, assuming that the last candle closed up? Would you buy a stock that had a previous run up and made a new high, 50-day high like AEE? I'm assuming AEE is an Australian stock. Let's have a look. Okay, I don't know why it's done that. I might get back to you on that. Don't know about that one. Come back to where we were. I might get back to you on that. Do you wait for a retest to the breakout level and then enter? High probability, you must be aware of that. Now here's the issue is that often you can wait for the retest and it doesn't happen. But be prepared that often they do retest, and then you have to ask yourself as a trader, if it did retest, is that part of my trading plan? That would give you the entry point then. And if it doesn't retest, then let the trade go. weekly stop or daily stop? The answer is a daily stop. Always break out on higher volume. Yes, it helps. Not a big fan of volume per se, but I agree it is important. Trail or stop, absolutely. Is the example stop on OEO for CFD position or share position as both, because FP Markets is direct market access. If you buy the CFD with FP Markets, the back end, the stock gets bought in the back end as a zero, as a full cover on the stock. As you know, the US markets don't allow CFD trading, but through various channels, you can. FP Markets has set that up, and we're a direct market access. Whatever happens in the market happens in the CFD. Are there any other factors that improve the probability of a breakout? The answer is yes. I'll show you one of them. One thing I really like to use is just a simple RSI, and if the RSI is over 50, over the equilibrium point, doesn't matter whether it's 60, 70, 90, whatever, but if it's out here over 50, gives you also a little bit more weight towards the trade. There's two things I use, RSI and CCI. I'll just put a CCI up here while we're talking about it. Commodity Channel Index. RSI over 50 over equilibrium, CCI over 0, high probability trade. With a breakout through here is nice to have. But as I say, I'm interested in the price first, and then if these look good, that's just a simple bonus. I'll take those off there. You really must come to understand price. Are there any other factors that improve the probability of breakout? Yeah, a couple of indicators. Is this being recorded? Yes. Oh, American AEE. Okay, let's take a look. When is FPM going to come out with a scanner like this for the ASX? We're not. You need to look at individual software. As I say, the Phoenix software I use will scan the ASX, and there we go. So AEE. This is the daily chart on the top. A bit of simple analysis. Let's get the weekly chart up as well. So I'll just squish the weekly chart up. Okay, so we can see that the stock has been in this kind of average uptrend here, but it has just here has set the higher low in here. It's got a little bit of work to do. You can see this rather large. I'll just open this out. You can see this rather large rejection period in the background, and I do need to hand it over to Joe in a minute, otherwise the late movies will be on already. We can see here the midpoint. This is a weekly chart of AEE. The midpoint of these rejection candles was the resistance point here in the top and recently here. So any trading has to get through that level. So this is not going to get interesting, this stock, until it gets over $44.20 or so, closes out through there. But a higher low on this side is a great start for that. And we can see even here had the rejection for a short while and then eventually broke through. Did a lower high, came back, formed a higher low, broke through the very strong candle here again and has moved up. But we can see also that the weekly is a bit of rejection here, a little shooting star at the minute. So a bit more work for this stock to do, but it would certainly make it onto the, if it broke above $42.25, would make it onto the radar. So with that, I'm going to hand it over to Joe. There's going to be a little bit of shuffling around, and I'll when does FP Market come out with a scanner like this? No. The stocks do usually use a 50-day breakout. Sorry, for the stocks in the FPM portfolio, I use a 60-day breakout. If this little scanner had a 60-day breakout, I would have used that tonight, but it's only got a 50-day breakout. Fabulous. All right, so I'll leave it there. Thank you so much for attending. Joe's going to show you the IRESS software and essentially how to set up orders for you. So just hang on for just a short minute.
So thank you, Gary, and good evening, everyone, and thank you for coming along tonight. So I do know you're all here to listen to Gary primarily, so I'll try to be brief. I'm just going to go through 2 brief slides about FP markets and our business model, and then we'll really jump straight into exploring the IRESS platform and placing some US CFD orders. So just looking at the products that you can trade through the IRESS system, if you're not aware, we do domestic and international equity CFDs, all under the DMA model, obviously. These are from Hong Kong, Singapore, London, Frankfurt, Paris, NASDAQ, New York, and obviously the ASX. In the system, you'll also have the full range of DMA CFD futures, so they're genuine exchange-traded futures contracts. This is across the Aussie SPY, DAX futures, Euro Stoxx 50, the S&P, and the Dow and the NASDAQ, all at E-minis. Interesting, these contracts are all at 1% margins. Also in IRESS, you'll have the ECN model of FX trading, which is the DMA trading equivalent, with over 32 FX pairs, including spot gold and silver. A little bit about the DMA model. By employing the DMA model, FP Markets lets you trade through the exchange central market order book and gives you access to real market liquidity with no additional price spreads. All the orders in this system are available for every market participant to see and are obviously executed with strict price time priority, meaning that the first order with the best price is always executed first. FP Markets adopts the DMA approach as we believe it is the most fair and transparent model available, and as we hedge 100% of our clients' trades, we align our interests with those of our clients. I thought it would also be instructive to go through some of the practices that we don't engage in and that you won't find in this model. For example, we do not engage in proprietary trading, we do not profit from client losses, give price or volume requotes, or ever change or alter the bid and offer on any of the securities that we offer. I'm going to put a slide up at the end with a promotional offer of $400 free commission on US markets. That's for accounts that have signed up and funded by the end of the month, or for existing FP clients that haven't traded the US markets and have an account balance in $2,000. That slide will go up at the end, but just in case it is getting late for people, I'd like everyone to know there is a promotional offer. If you contact me or any of the staff and mention the US-based webinar, I'll be happy to facilitate that for you. So that's it for the FP slides. So let's take a look into the IRESS platform. If you do have any questions about using the software, if it's the first time you've seen it, or if there are related questions, please let me know. I'd rather talk with you than at you for this whole time and make it as interactive as possible. So I'll look at navigating the platform and constructing workspaces, finding your US securities, placing a few trades in different phases, both at market, buy limits, buy stops, you might call them, or we would call them contingent orders. And we'll jump into this now. Okay, so this is what the web IRESS system looks like. For those of you who don't know the system or are coming into it somewhat new, I'll create a new workspace because this is the view you'll get when you first log in. It's a bit of a blank slate. You've got menu options in the top left-hand corner of the screen where you can find all the usable windows in the system. What you want to do with this system is to resize your windows and save time so you're not opening windows when you need them. You want this to suit your trading style, your screen size, and other things, other sort of personal preferences, if you will. If you look at my tabs in the bottom left-hand corner of the screen, depending on your screen size, I only need 3. You may need more. The limit is actually 5. So what I try to do is have a particular purpose for each workspace. I have one for viewing market information. I have one for placing the trade specifically, and I also have one for charting. I've set up another one here because there are some other interesting windows that you can take a look at that I might touch on later if we've got time. But what I might do is quickly go through what each window does and how you might use it to find US stocks, place trades, or place any other orders, and then actually place some dummy trades. So I've got a portfolio window here. This has my account statistics in the top left-hand corner. And I also have a position summary at the bottom section. So this is a test account here, but we can see that the value of the account, any margin being used, and a running P&L. Then I've got my position summary down the bottom. So if I like to sort this by actual volume, because the positive volumes will be longs, negative volumes will be shorts, and 0 is closed out. Now then there's the market depth. So Gary has been looking at a lot of charts, US stocks on charts. Would also like to bring these up in the market depth. Obviously the market depth is the heart of a direct market access CFD trading model because these are all real market participants. It's an independent price feed and it's the heart of transparency in pricing and access to order book volume. So it's very simple to swap securities and take a look at the volume. With a DMA model, obviously we do every stock on the exchange low. That's not long. That's not restricted at all, and the greatest variety of shorts. So let's have a look at how we might bring up some US stocks. There is actually a useful help function in the system where if you type in the stock and press dot, it'll give you a nice selection of stocks that you might be thinking of. So Gary was looking at DAL. We only see one bid and offer here because obviously the US market isn't open. They clear their market depth out, but we would see some live prices otherwise. So let's look at, if you know part of the name, NEM, or the stock code, NEM.NYS. So that's one of the stocks Gary was looking at. Interestingly, in the portfolio window, there is a margin table. This will give you a list of all the stocks, their margin rates, and their shortability that you can trade through FP. So if I go down by exchange, look at the NASDAQ exchange, and I'll get a list here. This list is exportable into Excel, fully sortable by any of the column headings. If there's stocks on here with a margin level you're not happy with or you'd like reviewed, these don't get reviewed as often as ASX margins. Happy to do that on the desk, or if you'd contact the sales or dealing desk, we'll take a look at setting these stocks up or even sourcing more shorts. So it's quite a comprehensive list, as I said, everything on the exchange long. Now I know Gary was talking about post-its. Gary's just a little bit older than me. I'll like to harness the power of technology and build watch lists with the software that we have. So building watch lists might work like this. If you want to keep track of your US stocks, ACL.NYS, etc., so on and so forth, McDonald's.NYS. Once you've built a US watch list, you might call this US Markets and save that. And then continue to build these watch lists as the FinViz software has given you an indication of a tradable idea, consolidation and, approaching those breakout levels. From here, also anything that you can trade in this system, you can chart. It doesn't have the scanning tools that FinViz has, but you can definitely bring up daily, intraday, 1 minute candles with a range of indicators as well. If you're looking for broad lists, I'll just show you how to do that as well. So if anyone wants to bring up the SP 500 stock list or something like that and use that as an example to, or an area to drill down and find more stocks. IRESS has a charting system as well. I'm sure you're all familiar with it. I'm not a terribly complicated or complex charter, so I'll just use this is about as complex as my IRESS chart will get. That's on an ASX stock, and it's very simple just to switch to a US stock also. Okay, so now let's look at the trading side of things. I'll just explain what we're seeing here. So I've set this up to make it very clear how to place client orders, which we do as a free service over the phone for clients. So place your orders, have a look at your stops, and manage your portfolio. So again, I've got a portfolio window on the top left so I can see what positions I'm holding. I've got a market depth in the bottom left-hand corner in case the market's open, I'd like to analyze the depth and the volume, or I'd just like to look at the current price. In the trades window, I'll have any trade that is executed on the account. So it's very simply just a completed trade. And we do have a date range here where we can go back and look at various trading history and also export that to Excel. Let's just stick with today. In the order pad, I have any pending and open orders that go through that make it through to the exchange. So this information is on the exchange waiting for you to amend the order or waiting for it to trade or in fact delete the order. In the bottom right-hand corner window, I have what's called the Contingent Order Pad. You might be familiar with terms like buy stop, sell stop. IRESS would call that a contingent order. It's an order that you've placed, but it's contingent on a particular price or particular condition being met. This will be very useful in placing US orders, given the time zone and the restrictions from not being up all night. So let's just quickly look at the different ways to place a stock. So I'll just use an old favorite, Facebook. There are three different ways or three different order tickets that you can use for ASX markets or US markets. I'll start at the simplest and the quickest. I put in the stock in the market depth in the bottom left-hand corner, Facebook, right-click and use Quick Trade. Now this stock only gives us market execution. It's buying or selling at the best available bid price or sell price once the market is open. So not terribly useful here, but if you did wake up in the middle of the night or if you like to be up and watch the market and you have a different schedule, that's fine. This is the quickest and easiest way to ensure instant execution. If the ASX market was open and I was closing CBA, I could right-click, use Quick Trade, and close that trade immediately at the sell price. Okay, if it's past about 8 o'clock and the exchange is willing to accept buy limit or sell limit orders on the stock, what I might be doing is right-clicking and using this create buy and sell. Now these are two sides of the same ticket, one for buying, one for selling. Now I've got a lot more information on this ticket, obviously. It's not as quick, but what I might be doing is looking for a buy at market or below, or a sell at market or above. So interestingly, I can see a bit more information in terms of margin. Is it a two-way stock or is it a shortable stock? The little Y symbol tells me that it is. So what I'll be doing here is placing an order for 100 Facebook shares, filling in a price, say 94 units. Sorry. With the US markets, I'll just they're not like the ASX markets using cents. We actually use decimals in these markets, so that's $94, and I can go ahead and hit buy. Now the problem with the US markets is that they use end of day orders only, and no good till cancel orders. So if that didn't trade in this session, I would need to replace this, and this can be quite a hassle. But this can be done nonetheless, it can be done on this ticket. Just quickly, I could look at a stop loss order on the same ticket if I wanted to. I'll put this at $90 even, $4 below, and choose market execution. So if you're looking to get in this session, you can place this order before the market opens, and if the market trades down to your level, you will be filled, and that's what the order looks like in the system. So I've got a position in the portfolio with no volume, obviously because it's not filled. I've got an order here for Facebook for 100 units at 94 in my order pad. That's actually sitting on the exchange, so that information is passed through to the exchange, and this is sitting on IRESS's server in terms of my stop loss. So this is waiting for the $90 level to be hit. Okay, now I'll go to the last method, and what I think will be make trading on US markets vastly easier for Aussie-based clients is to right-click and create a contingent order. Okay, so with this ticket, I can specify a level I'd like the order to trigger at, and then some which is the left-hand side, and then some instructions for my order ticket to send to the exchange. So I'll do one for Facebook as an example. Now, technically, if I got a buy signal on Facebook yesterday, I'd like to go into the trade tonight. I'm not worrying about a stop loss at this stage. I'd just like to execute when the market's open because I'll be asleep. So I type in the stock code. Sorry. So if the stock trades greater than or equal to $1, which is a condition that's obviously going to be fulfilled on the open, what action would I like to take? And I'd like to buy the stock in 100 units. I can specify a limit price if I like. Because of the uncertainty about where the stock will open, you can be assured of getting filled if you select a market order. So very simply, this order is going to hang around until the condition is met, which will be on the market open. Fire a market order into the market to buy. So I can ensure that if I'd like to get into a stock long or short on the open, that this is how it will happen. What about if I'd like to specify, what about if I'd like to buy below the market, but not keep putting my order in night after night because of the no good till cancel issue? I can do this also. So if I'd like to buy Facebook at $93.50, I can again use this ticket to specify that condition so the order will go off at the right time. So with Facebook, if the last price trades at less than or equal to $93.25, again, I'd like to buy 100 units. Again, I can use a limit order. I could say I'd like to get filled in a range between 93.25 and 93.30, or if I'm more worried about getting into the position than the fill price, I can certainly go ahead and use a market order. Okay, so there are a few different ways. Now, what's good about the IRESS system is the ability to, to use orders in a sort of risk management sense, to build in a stop loss for every order. I know Gary talks a lot about placing his stop on the previous day's low, which we can certainly do. And if you want to go, if you want to put all the parameters of the trade on the order ticket in terms of a stop loss and a take profit target, we can certainly do that as well. So let's have a look at one of Gary's examples. Okay, so this is McDonald's. I'll just bring up a quick chart here and zoom in. So we'd like to get into McDonald's above on the open today with a stop on yesterday's low, which is quite tight, 102.82. So we create our entry order, or we bring up a contingent order pad. This is one leg. A fixed CO is just one leg of the order. So what we'd actually like to do is string 2 contingent orders or 3 contingent orders together. So we simply change from if done, from fixed CO to if done. Now the ticket looks a bit strange. What we want to do is complete the first leg of the order, and it's going to be a fixed contingent order. So let's get into the stock. If the stock's greater than or equal to $1, I'd like to buy 100 units with a market order. This will get me in on the open tonight. I now go to the next level. And I find my stop loss level via Gary's chart. So this is the decision day. It's not perfect analysis on the chart for me, but if this was the decision day, let's put a stop below 102.82. Well, that's a little bit tight. Let's go back here and say if this was the decision day, it would have a stop at a low of 101.77, less than or equal to 101.77, to sell the stock at market. So what I've done here is a entry on market with a stop at a fixed point. If I just change to OCO and you look over to the left-hand side, you can tell that I'm going to be able to do a stop loss and a take profit. So I'll quickly complete that. less than or equal to 101.77 with a sell at market. There's my stop loss. And let's be adventurous and place a take profit above 115 even to sell at market. When you press this order, you'll get a confirmation. This is really your last. This is where you check the order before it goes into the market and just check over all the details to make sure it's correct. But this is really as complicated as an order does become in this system. We've got a buy above $1 on the open with a market order, a stop below 101.77, and a take profit above 115. If I put this in the Contingent Order Pad, I can have a look at this, and it's very easy to amend any of the details of this order. So if I get in tonight, I'm taking a position. The stock might move in my favor, and I might like to tighten my stop up and give my take profit a bit more room. Hopefully the trade becomes a break-even trade at worst, and I can give the take profit a bit of room to run. So how I would do that is to right-click and hit amend. So I would move this level up and also come down to the take profit and manage that accordingly. Now, just quickly, I'll check through the question function of the GoToMeeting software. If anyone has any questions at all about how these orders operate, is there a particular function of the IRESS platform that you're wondering it can accommodate for US markets or ASX markets in particular? Someone's asked to access a US stock, is it simply a matter of getting the correct code on the right stock? Well, you'll actually have to just call up the dealing or sales desk and request that US data be added into your account. It is actually very cheap relative to other data feeds. It's $3.30 combined. I think that's $1.10 and $2.20 for both US exchanges on a monthly basis. So if you request that data, the sales desk will add that into your account. From there, you can chart completely live intraday 1-minute candles, bring up market depth for US stocks like your Facebooks, your Nasdaqs, and all of these stocks that Gary's looking at via FinViz. How do we export to Excel? Grant's asked. This isn't a completely intuitive feature from IRESS because it doesn't tell you that you've used the Control-C and Control-V functions. But this trade history here on my account, if I highlight the top row and press Control-C and Control-V that into an Excel spreadsheet, I'll get the entire column listing. So that's how you might get open ILO closes from a particular window, or you might get all your order, your trade history. Andrew Saunders has asked, how do we access the E-mini? The E-mini is the same. It's from the Chicago Mercantile Exchange. With all the products in IRESS, as long as the data feed is feeding into the account, you've got access to type in the code and trade it. As I mentioned, APZ5 is the current SPY contract. Code, you can see that's a genuine exchange feed again, ESZ5.CME. That's the E-mini code there. So we do have a futures specifications document on our website that anyone can go to find out futures codes, margins, and contract information. That's on the futures tab of the FP Markets website, which is just here, futures specifications PDF download. So cycling between different securities is very easy. AUD, USD for FX pairs, XAU, USD for gold. I could go on and on through various exchanges, BMW in Europe, the London exchange, or any of those futures markets as well. I've got another question about IRESS platform costs. That's a good question. This platform is $55 a month. And then you've got the various data feeds that you might use. With most traders that are trading actively on exchanges, we'll rebate those costs. If your account size is $50,000 plus, we'd rebate that regardless of trade history. And then if you do $150 in commission in a calendar month, we would also rebate that $55. So there certainly is a cost to this system. But the more you trade, the less you'll notice those costs, as they will be subsidized. And we also offer a free version of this software, much less sophisticated, but still provides the execution and the links to the exchanges. Okay, I'll wrap this up, Jen. I just wanted to see if there were any questions, any useful questions I could help people with before I finish up. Look, I think that might be enough tonight. So thanks for coming. I'd just like to touch on this last promotional offer. So that is the end of the webinar. Thank you all for your attendance and your time. I'd like to leave you with a promotional offer of $400 free brokerage on US markets for new funded accounts this month, and also for existing clients who have never traded US markets who have an account balance of $2,000. If you do have any questions at all or would like to inquire about opening an equity, CFD or Forex account with FP Markets, please contact myself or a member of the sales team on 02 8252 6800 or use the sales@fpmarkets.com.au inbox. Thank you for your time.